Welcome back to the Eric Krown Crypto channel, wishing you a happy and healthy start to this nice weekend. It's a weekend to reassess the damage of the old crypto charts right there. Bitcoin taking a slight leg lower from when we spoke about last, but ultimately the daily still does dictate the overall direction, and risk remains to the downside, as we did say over the past couple days, based off of the particular setup that we're going to go over and follow up on now, which can give some insight as to where to kind of expect and how long to expect this current move to play out. Other than that, I think it's time for us to jump right into it, waste no more time, and start it off right on over here with exactly what we were just talking about, which is the daily. So the daily setup is this. Low volatility represented by this indicator right here, the BBWP indicator, getting below 10 percentile or more over the past 5, I think maybe even going on 6 years now. Yeah, this has been, actually going, I think we actually have back tests all the way back to 6 years, yes. But ultimately, that coupled with the direction of the daily stochastic oscillator has come up with a nice high fidelity, high probability move. In this case, let me just double check. Yes, this is the daily short, with a move in that direction of the daily stochastic, which has had about almost a 69% win rate right there. In this case, obviously that started to fire off and expansion started to happen basically around the 6th of February is where we started to really see this. So I'm going to mark this off right here, and we can start to measure out a few other things as far as the timing of this. So that's when that's when the setup started to get a little bit more mature. We started to say, hey, you know, long term, I still have my reasons to believe that it's not that I have my reasons. Like there's a lot of data that does suggest that the lows are in for a while, but short term, relative to like, you know, the next few months, you know, it's more likely to play out a bit of a pullback here, which is exactly what we're getting right now. So ultimately, as long as the daily stochastic oscillator is positioned to the downside, which it still is, risk remains to the downside. About 22,200 is the magical number for today's closure. And you can see a few of the things that I think are very relevant over here. So first and foremost, I want to talk about the average return based off this setup. It is about 20%. I do think that looking for 20% based off of this setup is probably going to be misguided because this is not a picture perfect setup over here. As you can see, the volatility portion of this did not really spend a lot of time below that 10 percentile number compared to what you saw back on over here throughout the January massive green dildo party. So that would suggest that the overall effect of this one upon expansion, which is what we're getting right now, probably not going to be as much as those prior ones. So that's when we can start to make a relationship between the average return and maybe the bottom end of the first standard deviation, coming up with a range basically of interest, if you will. So that'd put, you know, that would kind of give a range of interest between about 12.5% all the way up to about 20% basically over the course of 11 days, because obviously this one, you know, is going to work out to the downside fashion. It's already like moving in that direction. It's pretty fucking obvious. So yes. From the time that this one got confirmed to where we're at right now, 5 days. 5 days, so it's about halfway through, almost at the halfway point. So yeah, risk still does remain to the downside. It's still, yeah, I'd say that it's still relatively reasonable to be, you know, looking for more. But as far as percentage goes, well, let's take it from the highs, and where we're at right now is about 11%. So we're pretty close to the bottom side of the first standard deviation. That would put Bitcoin officially at about 21,150 or so. And if we do see another leg on top of that, you know, maybe see like 15 to 16%, that would put Bitcoin at the mid $20,000 territory, which I do believe it is the last CME gap BOLA coming in from this region right here. And if things get really crazy, you know, again, I wouldn't rule it out, but what would 20% off of current price action look like? You know, that puts Bitcoin down to like the mid to upper 19s. So that's what I think is kind of at stake right now. Personally speaking, though, if Bitcoin does start to close below about $20,000, that's going to be concerning. That's going to be pretty fucking concerning, at least in my opinion. At that point, you're probably going for the full retrace. Just that again, that's personal opinion. You know, price action will do what price action fucking does. But at that point, I'd be like, I'm not so sure about these lows, man. Not so sure about these lows long term. Anyways, moving on now. Something that I forgot to mention yesterday, although it was on my notes, was the weekly hidden bearish divergence over here, which did get confirmed on CME actually. So again, another thing that does suggest that next week, you know, a little bit of pressure, not a little bit, like pressure to the downside in the shorter term. Other than that, what else can we get towards? We can start to talk about, or should we talk about stochastic momentum? Let's actually go over the low-term time frame ranges here. I think this is going to be more interesting first, and then we can go over stochastic momentum. So here's the full hour for Bitcoin. So everything that we just spoke about was relative to the daily and the weekly. So, that's like relatively higher term timeframes. This is a 4-hour time frame, maybe representing the more short term here. And we do have another setup similar to yesterday. And yesterday's one actually still hasn't really fulfilled its general trajectory. In fact, that'd be another thing that does say downsides. Another short-term downside move probably likely. But the 4-hour time frame here does have a setup going on. Again, when it comes to the HPDR indicator, it gives us a really clean way to be looking at the areas of interest to the upside or the downside based upon continuation. So in this case, what are we looking at? We're looking at several closures below the blue 50% of historical returns range lows. That was 22,300. That was a confirmation of the overall break of this prior structure right here. And that has remained consistent basically until today. We're closing once again in the blue range. But once that started to close below, we can then start to reference the volatility portion of this to see where does volatility decline plus those closures below that range low. And that actually happens right here. And yes, it is still below the blue. So fair enough. In this case, that then sets into motion these statistics over here, which let me just double check that this is good. I did make a note of this one, that this one, it was extremely good in bull markets. Does imply not so good in bear markets, but actually out of 25 tested iteration in a bull market, 21 were upside moves. That's extremely high probability. But even including bear markets and bull markets in this case, out of 50 iterations, 39 played out to the upside fashion. So it does have a rather high strike rate. Again, 78%, not the same thing as 100%. We saw the same thing yesterday. There was a downside move based off of a kind of similar setup over here on the short term. But that's the true value in understanding a setup like this, or an indicator. It's not necessarily an indicator. It's like the whole fucking theory behind this damn thing. But basically it is this. If we are going to see a bounce, on average, you would expect about a 3 3/4% return. Not fucking bad, dare I say. If we see the failure, which we'll go over failure conditions in a second here, which is, again, why I think that this is rather valuable, probably a 4% move to the downside. So let's go see what that would look like on current price action. Obviously, if this does come to the upside, that would put Bitcoin back at about 22.5, maybe even 22.6. I would go as far to say that if you see any sort of a higher term time frame, like a 12-hour or a daily time frame closure back above the breakdown region that we saw, this was on Thursday at 22,300, this is going to be a major trap. And you're not just going to see a move up to like 22.5. I mean, you will see a move to 22.5, but it'll probably pull back and then continue back up into the mid 23s and probably just continue onwards and forwards from there after a bit more consolidation. By the same token, if we do see the failure of this, then we're probably looking at a 4% move to the downside, which would put Bitcoin, just below 21, which is in alignment with a lot of the things that we're looking at over here as far as areas of interest go to the downside. So that would be like just below 21, maybe like 20,900, 20,800-ish region. So going back into it over here, what would actually constitute a failure in this case? A 4-hour closure below about, what is this area right here? 21,450 or 21,500. I think it's 21,450. I think it's 21,450. Yeah. If that happens, expect another, or at least I'd be going off of that and saying, probably likely we're going to see another like decently sized leg lower, just below 21 or so, and probably another attempt for a bounce right there as well. Anyways, other than that, we can go and reference stochastic momentum just to see where the pivots are at right now, just to kind of understand. 5-day time frame closed into the downside for the first time since this rally began, below $24,000. Not fucking good. 2-day time frame is going to be also downside pivoted below 24. I haven't gone back over the 5-day time frame since last week, but that one played out like nearly fucking as perfect as you can ask for. That was pretty cool, honestly. That was pretty fucking cool. Daily time frame, we already know, 150. 12-hour time frame, still nosediving below $22,000. So keep that number in mind, because obviously if the 4-hour were to play out, then that condition will be met. 6-hour time frame will turn up above 21.6. 4-hour time frame will turn actually up above 21.6 as well, and hourly will continue up above 21.6. So a lot of things pivoted at 21.6, meaning that if Bitcoin starts to close below there, then yeah, you're probably gonna see a short-term downside move first before anything else. As long as Bitcoin doesn't close below there, you're probably gonna see a weekend bounce or an attempt at a weekend bounce. With the areas of interest that we spoke about in mind, well, basically like 21.850 to 21.9 is probably where to be looking towards. But things do start to change back above 22.3. Until then, pressure remains to the downside, and we'll come back at it tomorrow with some more long-term time frame, like some higher term time frame, some macro time frame analysis, which well, picture hasn't really changed all that much, but there'll be some new things to be speaking about, which I do think are important, that put things to perspective long term as well. Anyways, with that said, take care, much love, and see you hopefully soon.